We have not changed our price target in quite some time, and you can see the building blocks associated with the price target. Our bull case has the probability of it, we believe, has increased as certainly with the new administration here in the US wanting to add Bitcoin to the Treasury Reserve. That's very interesting. We thought that would happen with emerging markets who are buffeted by the dollar left and right, that they would want more exposure to this appreciating asset. So we've been surprised that the developed world is really going to lead that move in terms of Treasury reserves.
One of the biggest surprises as we enter 2025 is the sharp decline in real GDP growth for the first quarter. The Federal Reserve Bank of Atlanta's GDP Now model suggests a 3% contraction at an annual rate. This unexpected downturn has alarmed many, especially since the economy appeared stable just months ago. However, Wood emphasizes that this is not entirely unexpected. ARK Invest has been talking about a rolling recession since the Federal Reserve began aggressively raising interest rates in 2022. According to her, this downturn marks the final phase of that cycle. The good news? The economy is on the verge of a significant rebound. Wood believes the equity markets will soon look past this temporary economic weakness and focus on the future, one driven by increasing productivity and technological breakthroughs.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think the shocker to a lot of people is we've entered here in 2025 and the Fed Atlanta's GDP Now indicator suggests that the first quarter will be down in terms of real GDP growth, down 3% at an annual rate from the fourth quarter to the first quarter. And that has unnerved a lot of people because the economy seemed to be doing fine. But as you know, if you've been watching In the Know for a while, we've been talking about a rolling recession since the Fed started jacking up interest rates in 2022. For 3 years, a little more than 3 years now, we believe we've been in a rolling recession. And we're coming to the end of it. So that's the good news. The bad news is we do have to go through this process. Bottom line, however, we think after this initial shudder that the equity markets are going to look through whatever the next 6 months holds in terms of economic activity into a future where we see productivity driving real GDP growth at an accelerated rate in an exciting way. And at the same time, inflation continuing to come down because productivity is going up. Productivity is a powerful antidote to inflation. And we think we're probably on the threshold of some of the most important productivity gains in history. So just wanted to set the stage this way. As you know, there was a lot of hope coming out of the election that we were going to be on our way in terms of the equity markets' health and the broadening out of the equity market as a sign of its health. And it has begun, but as always, 2 steps forward, 1 step back. We have not changed our price target in quite some time, and you can see the building blocks associated with the price target. Our bull case has the probability of it, we believe, has increased as certainly with the new administration here in the US wanting to add Bitcoin to the Treasury Reserve. That's very interesting. We thought that would happen with emerging markets who are buffeted by the dollar left and right, that they would want more exposure to this appreciating asset. So we've been surprised that the developed world is really going to lead that move in terms of treasury reserves. So Bitcoin, three revolutions in one. It's a monetary system. Bitcoin blockchain is a technology, and it is the first. It was the first. We wrote our paper on this in 2016. The first of its kind in a new asset class. And it's a very big idea. You can see the institutional, the purple there is the largest, it and digital gold practically tied, but relative to the base case, the institutional uptake is the reason the probability of the bull case has increased here. I think our new regulatory system critical to that as well.
Inflation remains a topic of debate. While inflation has not yet fallen to the 2% target, ARK Invest expects it to decline further. Some recent price increases can be attributed to businesses preemptively adjusting for potential tariffs, but Wood believes these inflationary pressures will subside. As the velocity of money slows down, inflation is likely to follow suit. Looking at historical trends, the velocity of money has been in a long-term downtrend since the early 2000s. Economic shocks such as the tech bust, the global financial crisis, and the COVID-19 pandemic have contributed to periods of extreme caution among businesses and consumers. While there was a brief post-pandemic rebound, recent data suggests that money velocity is once again tipping over.
And then market outlook. We're obviously we're seeing a lot of volatility in the market. We're in a transition, and one of the things we think is going on and has been going on is we've been in a rolling recession ever since the massive interest rate hike, record-breaking hike, starting in 22, and in the U.S., most sectors are down and out. You'd think headline numbers say, "Oh, everything's fine." I think our election basically proved the opposite. And what's happening now is the last phase of that rolling recession probably is underway. Why? Roughly 30% of employment in the U.S., 30% of the labor force, is wondering, based on DOGE and how it's all going to fall out in the government sector, not just federal, but state and local, is trying to figure out, are they going to have jobs or not? And businesses are saying, wait a minute, are these tariffs going to mess with my supply chain? What should I invest in this new project when I really don't know? So I think what you're seeing right now, a lot of uncertainty, which is pushing down the velocity of money. The first decline in the velocity of money sequentially was in the fourth quarter. We think it will continue. We think you're going to hear more talk about a recession, and we'll just be concluding with, yeah, this is the end of the rolling recession, and the market should start to look through it because every other sector is down and out except for the consumer sector. So bit of a pause there. And then the other side of that is the response to incredibly business-friendly policies. So we think animal spirits are going to take off, and as I mentioned before, the cost of innovation is collapsing. So we think entrepreneurial zeal is going to have a heyday. So we're pretty excited about that outlook. and our confidence in it is growing. What's interesting short term is many people are saying interest rates higher for longer, higher for longer. As you can see, the long rate is starting to go down. It's telegraphing something. We've shown you this this chart for quite some time. Money growth is 3.9% on a year-over-year basis. That's in the purple there. It had been negative, and monetary policy works with lags. That's why we put the green line, which is inflation. We've lagged it relative to, or I should say pushed ahead the money growth numbers. And as you can see, there's a little bit of consternation that inflation has not continued down to the 2% area or less. As you also know, we expect it to do so. The burden of proof is on us, to be sure. I think there has been a lot of pricing behavior recently as companies anticipate tariffs as part of their input costs and are trying to get ahead of it. But we think the resolution will be to the downside here, sort of following what money did. And one of the reasons our conviction about this has grown is the velocity of money, or the rate at which it turns over, is starting to roll over. When the velocity of money is moving up, people are confident, they're willing to let go of their money, splurge a little. That tends to turbocharge whatever monetary growth is out there. When the velocity of money turns down, then that detracts from the money growth out there. So on this next page, you can see the very long-term chart of the velocity of money. It has been in a downtrend since 2000. I think the reasons are, first, the tech and telecom bust was a real shock to the system. Then we had a little bit of a cyclical rebound in the 04-05 time period, and then continued down primarily because of the excesses that became clear in the housing sector, led to the crisis, the global financial crisis, which again put a lot of fear into consumers and businesses. So again, they hung on to their money, and that was exacerbated, of course, during COVID. There was a collapse in the velocity of money. You know, people seized up and just were very afraid to spend, wondering if we were going into a global depression. We've had the cyclical upturn from that extreme decline, and you can see we're starting to tip over. And if you look at the year-over-year percent change of velocity,
Wood remains highly optimistic about the future. She sees the current economic conditions as setting the stage for a wave of business-friendly policies that will unleash entrepreneurial activity. Innovation is accelerating across multiple sectors, and the cost of breakthrough technologies continues to decline. As a result, Wood believes we are entering a period of unprecedented technological and economic expansion. From artificial intelligence to blockchain technology, disruptive innovation will be the defining theme of the next decade. ARK Invest continues to focus on high-growth sectors where productivity gains will drive real GDP growth while keeping inflation in check. Wood's conviction in these trends is growing, and she encourages investors to position themselves accordingly. Please like and subscribe.